A real novation, the way that I teach it and the way that I've been doing it for about 12 years now, is a wholesale style transaction. So I'm not taking deed, I'm not renovating, I'm not partnering, I'm not funding the acquisition on a property that's in wholesale condition being sold to a retail buyer.
All right. Eric Brewer from Instagram, where we connected briefly. You are the Novation King, and I am super excited to have you on because, creative financing is all the buzz right now, but novations are one of those things that I feel like no one really has a good, good methodology of doing it correctly. You can go and you can ask them forums, you can do all this stuff, and it doesn't really, no one has a good answer, but you're kind of the guy because you've done like hundreds of them. So I'm super excited to have you on the show. So I'd love to hear kind of like about your background, where you came from and what your business looks like and how you're using these novations to basically just print money.
Yeah, cool. I actually got started right out of high school. I was in the U.S. Army. After finishing up my time in the U.S. Army, came home, didn't have an application for my MOS in the civilian life. So kind of kicked around a couple different job opportunities, ended up working at a car dealership, worked my way up, eventually got into sales and then management, and got a little burned out after about 8 years of being in the car business, working 75, 80 hours a week. Super thankful for the experience. It gave me a great sort of foundation and baseline to get into real estate, and has played a big part in my development, and made the decision right after having my first child that I could be a good car guy or a good father, and one of those would have to take priority. So chose to do my best at being a good dad, and hung up my car salesman shoes, and did some soul searching and tried to figure out what career path would be a good use of the experience I got in car sales, but wouldn't be as demanding as the car business was from an hours perspective. So somewhere along the lines, I got bad advice, and someone told me that the real estate business would give me more flexibility and time, which didn't happen right away. I can say that the first thing I noticed is I didn't have to physically be at a location like I did in the car business. So even though today in real estate it feels like I'm sort of always working, I can do it from my phone, from my office, from home, from vacation. It does create a lot of flexibility with where I can work from. So after about 60 days of just taking some time off after the car business, my mentor from the car business reached out to me and had an interest in starting a real estate business. And him and I had worked really well together over the 8 years that I was there. And we had lunch, and he kind of shared with me what he had found out about house flipping. And this is back in 2006. So wholesaling and fix and flipping wasn't quite as sexy as it is now. It was sort of a well-kept secret. And it sounded super exciting to me. I had the opportunity to be a part of something, sort of from the ground up, and made the decision to do that. And that's how I got my start in real estate. Flash forward to today, we have about 35 employees. Last year we did 370 some deals, predominantly in about a 2.5 hour radius of southern PA, just above the Maryland border, on the eastern half of Pennsylvania, about an hour and a half from Philadelphia. So we do about 25% of our business is wholesale. Another 25% is fix and flip and turnkey. And about 40 or 50% of all of our deals for the last 8 to 10 years have been novations.
Wow. For the last 8 to 10 years. That's crazy. So you've been doing novations way before these dudes like Pace Morby and these.
I guess, yeah. I started doing them.
Started talking about
I first found out about it in 2008. Obviously, there was a major event that took place in 2008. And the way that it impacted me the most is when I was flipping my deals prior to the financial crisis, nobody used FHA financing. Everybody had a conventional mortgage, non-conforming, 80-20, bad credit. FHA was a bad word. Immediately after the market started to correct, everybody was using FHA. It was like the only way you could get a mortgage in 2008 through about 2012, unless you had a 900 credit score and 80% down. So that caused a lot of inventory management issues for me because FHA has this seasoning requirement for flipped properties that require me as the investor to own it for 91 days before I can even write a contract with an FHA borrower. And then they don't close for another 45 days. And then there were all these extra layers specifically back in 2008, 9, and 10 of underwriting because they got absolutely slaughtered on loans that went bad that were flipped properties. So as they're repossessing these properties, Bank of America, Fifth Third Bank, Wells Fargo, all of these lenders are going, we're getting absolutely just murdered on these flips where the guy bought it for 70, he sold it for 190. Now we got the house back and it's worth 40. Right? So we're going to be very strict about, regardless of what FHA says, they have all these. That's why I first learned the term overlay. If you've never heard of a mortgage overlay or a bank overlay, that means we're going to take all of the rules of FHA, VA, Freddie Mac, Fannie Mae, and we're going to impose all these extra rules on top of that to make it really hard for you to get approved. So that's what was happening then. And I started searching for a solution to this seasoning issue. And my attorney introduced me to Novations because in a Novation, you're never, much like a wholesale deal, you're never taking deed to the property. So it doesn't create a seasoning issue. And that's when I started learning about Novations. Luckily, early on in 2008, all the way through 2010, Congress passed a FHA flip waiver. They passed a spending bill to incentivize investors like us to buy up all the bad foreclosures, bank-owned, and short sales. And they knew that that FHA requirement would inhibit our ability to be able to buy those properties in bulk and sell them after renovating them. So between 2008 and 2010, seasoning went away. And then in 2010, the old rules kicked back in, and that's when I really started cranking up Novations.
Man, there's so much to unpack in that. So people listening, I have kind of my own view about what a novation is. I would love maybe just take like a quick step back before we dive in. What is your definition of a novation? Like, how do you describe it to people? Because how I hear a lot of people sort of describe it is you're essentially partnering with the seller to flip the property.
That sounds horrible.
But inherently that's, it does sound horrible, doesn't it?
It is horrible.
Partner and
so
flip
how do you
sound
define it?
awful. Those two things are like bad words, right? So I'll give you two descriptions. One is like an elevator speech of how to explain it to someone that's in the business. And then I'll give you a second, more technical explanation. I think that will give you the mechanics of it. So a real novation, the way that I teach it and the way that I've been doing it for about 12 years now, is a wholesale style transaction. So I'm not taking deed, I'm not renovating, I'm not partnering, I'm not funding the acquisition. On a property that's in wholesale condition, being sold to a retail buyer. So just take like 15 seconds to just let that sink in for a second. Wholesale style transaction on a property that's in wholesale condition, being sold to a retail financed buyer. So that's like the flyover version, right? You guys are in the business, you can put the pieces together. The technical explanation of a novation, the word itself is actually just Latin for replacement or new. So if you think about the normal wholesale deal, it's an assignment where I'm taking my fiduciary interest, my equitable interest in the property, my contract, and I'm assigning that property to you for a fee. So I remain in the transaction, right? My contract is actually the mechanism that produces my profit. A novation, which means new or replacement, is actually a conditional release of the original purchase agreement in place of a new agreement. You're like, well, Eric, why do that? Well, when I replace it rather than assign it, it now becomes a financeable transaction. So I can sell that property to a financed retail buyer, which on an assignment you cannot. You cannot assign a property to an FHA, VA, Fannie Mae, Freddie Mac borrower. It's not an insurable, lendable transaction. So for an investor, that normally means it changes everything, quite frankly, because it means that you have to buy at a deep discount so that you can sell to a cash buyer that's going to fix up the property. And most often that person that's going to fix up the property is either paying cash or using hard money financing. So the assignment and the inability to finance it doesn't really matter. But when you get lots of leads, which most people do, where the person won't accept their wholesale offer and the property's in a condition in which it would be sellable to a financed buyer, we generally turn all of those opportunities away, which, by the way, are about 75 to 90% of all the leads we generate. People say no to our low ball wholesale offer. It just doesn't work for them, right? So we start chasing ugly houses that need a bunch of work because we go, well, the only people that ever say yes to my crazy offer is someone that's super distressed, that has a house that needs a bunch of work, and those two kind of go hand in hand, and they're willing to sell it to me for 50 cents on the dollar. That's like such a small portion of the overall homeowner population. It's literally, finding a needle in a haystack like we got to find 200 needles a year if we want to do big business, right? It's hard. There's hardly that many needles out there.
Yeah.
Versus Novations.
Well, if you go to
Novations, it's more like, well, the whole haystack becomes an opportunity because, when you look at a normal Novation deal on a property that has a current condition value of 250 plus, as investors that know how to do Novations, we can pay up to 85% of current condition market value. So you think about that. How many people did you talk to last week that if you could offer them 85% of current market value, they might have said maybe? Probably a pretty good number.
Right.
In this market, tons of them, right? Because everyone's sitting on, inflated houses still. There's a little bit of teetering in the real estate markets making people nervous. No one wants to spend except 65% minus repairs, which is what the wholesale prices are right now. 85% though, they would take that all day.
So let me ask the question then, on the technical side of things. You're talking about the Novation agreement. So when you're going in and you do get a seller to say yes to your 85% of current value, are you actually having them sign a purchase and sale agreement, and then the Novation is going to your end buyer?
So the mechanics are, we arrive at an agreement. I disclose that, and Mike, Dan, in order for me to make this deal work and come up from, say, my 150 offer to what sounds like would be a good number for you at 185, the only way for me to make that deal work is if I can take the property to the open market and somehow negotiate with a retail buyer where they buy it in its current condition, or maybe they want me to do some repairs because of an appraisal or an inspection. And it sounds like you want to avoid that stuff. Like you're not really interested in appraisals and inspection. Like, no, I don't want anything to do with that stuff. I want, like you said, cash, as is sale. Okay. So if I could take it to the open market and make a compelling offer for a retail buyer to come in and buy it in its current condition, or maybe with one or two, upgrades that they're interested in, I can make the deal work, but I do need reasonable access to the property. And then I want to be sure, I need your permission. I want to make sure that we're on the same page. I'm going to take it to the open market. So you're likely to see it on Zillow, Realtor.com, the MLS. I often put a sign in the front. That's the only way that I can expose it to the retail buyers that are out there that are, going to need an appraisal and a home inspection to make them feel comfortable moving forward. And if and when the time comes where I successfully negotiate a deal with that buyer, I'll come back to you and we'll have to update the paperwork a little bit. But when that time comes, I'll be more than happy to reach out to you. I'll share exactly what we sold it for and how that deal is going to go down. The good news is the number that you and I agree on today is exactly what you're going to get. If I sell it for $100,000 less, has no impact on you. Have a big impact on me. I'd be pretty upset if that happened. And if it sells for $100,000 more, good news is you still got the exact amount of money that you and I have agreed on.
Awesome. Yeah. Wow. So that brings up another question, which is a common one, so you have the situation, they want 185. You do go sell that property for 285,000. That negotiation that you typically have with the seller, is it basically like, this is your price that you're going to get, and I get everything above that? I know I've heard about people doing these like splits where they'll like give everything above a certain price, they'll do it. Or one of the things that you hear some of these people, like these other sort of gurus out there, they'll say like, oh, you fixed in like a $15,000 fixed fee for yourself. They're kind of like leading with the seller in mind, right? And worrying about having to have that hard conversation at the closing table. But it sounds like you don't necessarily.
No, I worry about it on the front end. And that
you're being
transparent. It's 100. Everything else that we do about splits and partners and all that stuff is we're diluting the fact that we're going to make money. Right. And we're dancing around a little bit, which I generally, it's not really an opinion. I've found success in just being upfront. And I think generally we've gotten so conditioned in wholesale because the normal nature of the business is I'm buying it, I'm paying cash. Well, I'm not actually, someone else is going to buy it and I don't really have cash. So a lot of wholesalers figure out the level of sort of, gray that they're comfortable operating in. And everybody has their modified version of a little white lie that they tell. Where if you're listening to this and you want to do Novations, I would encourage you not to unless you're 100% committed to being fully transparent. Because, when you start to involve retail agents, retail buyers, lenders, and you bring all of those people into a transaction, and then you have seller issues where the seller's freaking out because you danced around the topic and you didn't disclose. And, I've had people that say they have sellers that are upset because they're making $10,000. It's not necessarily the amount of money. It's how big of a gap is there between what you told them and what they're experiencing. And that is the amount of that in direct correlation is what affects how they respond to understanding you make money, not the profit, right? So if you make $10,000, which is it's a relatively small amount of money for what we do, and you gave them very little information about what to expect, and the gap between their expectations and what really happened was huge, it's a disproportionate amount of money to expectation. They're going to freak out about $8,000 to $10,000. If you're crystal clear about the expectations and you deliver on the promise and you make $100,000, they'll generally have no complaints. So the resistance you get on the back end is all about how you position the conversation, the amount of transparency that you're willing to operate in, and how good of a job you do on the back end of fulfilling the promise that you gave to your seller.
I love it. It's a people biz at the end of the day. And I think you're completely right on the wholesale end. People tend to miss that. And also too, I think that there is an element, especially with new investors, they feel like a little bit of shame or things like that to be making that amount of money, especially if it's from somebody that, they potentially had upside and that wasn't fully disclosed to them, right?
And I think too, on top of that, to add to it is when there is upside, people are like, well, why don't they just go and take care of that upside? I'm like somehow scamming them out of the upside. It's like, no, that's not the case. In most scenarios, it's that those people are willing to pay you to not have to deal with that, or they have issues or concerns about their property that they just don't want to deal with. And so you're just talking about that shame. It's like,
so weird, right? That we somehow think that what we do is, it's really kind of egotistical, if you ask me, that we believe really that like this business or this particular niche is so much different than anything else. Most people have bought and sold and traded in multiple cars, right? By the time they reach 30 years old, every single person that trades in a car at a dealership has always taken less for that trade-in than they couldn't have knowingly out of matter of convenience. And no one ever says, well, why don't you sell it on your own? It's generally accepted in that industry. And somehow we believe that every home seller out there is always, it's one of the grave mistakes that real estate agents make, and they miss a massive opportunity to work with investors, is they have this sort of narrow perception that every seller that's ever contacted them is only interested in getting top dollar for their property. They don't see that there's this blend of convenience versus value, right? So they have plenty of people. I've bought so many properties off the MLS, it would make you sick. Where the seller called me, it's been listed for 4 months. I'm having a meaningful conversation with them, and I'm like, hey, why not just continue with the real estate agent? It seems like you guys have it priced close to what it would sell for. And like, yeah, that price came from my real estate agent. I really want to get out of here in like the next 45 days. And I'm just not super, I know that I can get more money for it, but that's less important to me than the peace of mind and getting done. And I'll call the agent after the contract's written. I'll go, hey, Mike, great news. I'm going to be sending you a 5% commission check at 140, which is the price that me and your seller arrived at. That was fair. We're going to close in 45 days. I just need you to move it to pending and then show up at settlement to collect your check. No, you don't have to work through the appraisal or any lending issues. I'm going to pay cash. Is that cool? And they're like, they never had a conversation with the person about what was actually going on. And they just make this assumption that every single person wants maximum amount of money for their property. And it's frankly just not true. I mean, as wholesalers, we do it all the time. We turn around and sell it to someone that's going to make probably 2 or 3 times the amount of money we are. They're going to do more work, and there's a matter of convenience to us, and we don't have to fund the property, and we can settle in 3 weeks. We don't have to wait 3 months to get the renovation. But somehow we believe that we're different than the people that we're servicing. It doesn't make good sense. Yeah,
it's not true. Yeah, that's a great point. So on that same vein, because I know listeners are probably going through their head of like, well, what does this look like? What kind of seller is this? So could you maybe talk about kind of the ideal, seller persona, or what you're kind of targeting for
That's
those
a great
types of
question. I
transactions?
appreciate you asking it. It often gets overlooked. I'll give you, there's 2 answers to that. One, these people are already more than likely in your funnel. They're already in, you're already communicating with them. So on a very broad scale, it's anybody that has a house that doesn't need a complete remodel that wants more than you can pay. So that's very broad, right? That's who you should be offering it to. Now let's talk about who likely accepts it. The person that will likely accept it, oftentimes what I found was, let me take a step back. I do this in batches of 100, what I call net leads. And what I found is out of 100 net leads, about 10% of the people are likely to convert to a wholesale offer. And then I go, okay, well, what do I know about that 10% of people? I call it a seller seesaw, right? If you imagine the old playground and the seesaw, and on one side, there's condition. On the other side, there's discount and motivation. As condition deteriorates, what happens to discount and motivation? It goes up, right? And the condition, by the way, is the property or their life circumstances. They either have a messed up roof or a messed up marriage. There's something going on. And as condition deteriorates, it's just weight displacement. Condition comes down, motivation discount goes up. So this is what your 10% of net leads wholesale looks like, right? Distressed seller, property that needs a bunch of work. Those 2, like I said before, kind of go hand in hand, and they're willing to sell it for 50 cents on the dollar or close to that. All right, so now what's the other 90% of my leads look like? Well, about 60% of those are reversed. Conditions way up here. There's not much going on in their life. And you know what? The house is like perfect. Doesn't need much of anything. Well, now discount and motivation's down here. I wish I had a solution for that. I don't. If you tuned in for that, I have to apologize. You're going to be let down. We just put those people into a long-term nurture sequence. And we generally, it might sound morbid, but we hope that something changes with the property or their situation, that might get back to balanced, or maybe even in extreme search, it'll completely flip-flop. Right? They lose their job. Someone passes away. They get sick. The house has a major catastrophe that they can't afford to fix. Something has to switch. But I can't do anything with those people other than just put them on a meaningful, long-term follow-up sequence that's generally automated, right? Because I don't want to waste time talking to a bunch of people that have zero motivation. So now what's left? Well, it's 30% of your leads, right? 10% distressed, high discount, high motivation, 60% flip-flopped, no deal, no way, unrealistic price. They don't want to move for 2 years, multiple decision makers, can't do anything with them. Now, 30% of your people are what I call a balanced seller seesaw. There's a little bit of reasonable motivation. They want to make a deal. And the property is at or around just above or just below what I would say good condition. So let's talk for a second. Only 2 of these categories of the 3 that I gave you are monetizable for us as investors. The middle part, 60%, can't do anything with them. 10% of these leads can be monetized by way of wholesale. 30% can be novated, seller finance, sub 2. All of those people kind of fit into that category. And then inside of that 30%, there's like landlords are more likely to do seller finance than an owner occupant because they're an investor and that makes sense to them. So you mean I can go from getting $1,000 a month rent and dealing with maintenance to $600 from you? Cool, I'll do it as long as you pay me my price. So inside of this 30%, there's a couple different smaller categories of people, all of which can be monetized if we make a compelling offer that aligns with their desired outcome. So the point is there's 3 times more opportunities in your lead funnel if you learn how to do novations in these creative deals than there is trying to jam everybody into a wholesale box. So the normal person is that. They like to make a deal. They're relatively motivated but not distressed. They're saying things like, Mike, that sounds good, but I'm not in a hurry. Dan, that all sounds great, but I'm not going to give it away. There should be an alarm that goes off in your head when you hear that goes, novate, 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 right? because they're now when I say, well, I could probably do a deal, but it's going to take maybe 3 months to get this buttoned up, Mike. Is that something you'd even consider? I already heard him say 10 minutes earlier he wasn't in a hurry. I know the answer to the question. It's rhetorical at this point, right? So those are the people I'll generally tell you. Wholesale deals were solving like third world problems, financial distress, like dire straits. Novation deals were solving like first world problems, convenience, discretion, like stuff that we don't understand why people would do, but they're willing to pay a premium for that stuff because it's important to them. So hopefully that shines a little light on the difference between like what a wholesale deal looks like and who you're getting people to accept your offer now versus what these folks would look like.
Yeah, that's huge. And I think that you outlined it perfectly with the, I'm not in a hurry. I'm not going to give it away. I mean, I'm going to definitely make sure that all of our sales guys listen to this because they bitch about those people all the time.
It's like, it's a great house.
Because that's like,
right. And then sometimes we'll actually get a wholesale deal accepted on those deals. And one of the things that we don't talk about enough with Novations is if you position and anchor all of your negotiations with a cash offer, and anytime you increase your offer, you suggest that we do what I call the equity protection program, because Novation doesn't mean anything to a seller. Like you say that, I don't know. Well, Mike, I might be able to get you approved for our equity protection program, which may allow me to come up a little bit in price, but I'm not even sure that that's something you would consider. And they'll go, well, yeah, I'd love to hear more about it. So let's say now we anchor at $100,000. Seller says they'll make a deal at $150,000. I propose the equity protection program. We move and land at a spot that's $150,000, but now I have their permission to take it to the open market and have reasonable access. That's a property deal that you're already making. And maybe $150,000 is a max allowable offer, but you would have only sold it for $170,000 to a cash investor. Now you can take it to the open market and sell it for, if $170,000 is an investor price off market, $200,000, $210,000 to an on-market retail buyer. So now you can increase your deals that you're already doing. What I found is when people get really good at Novations, about 25% of your existing wholesale deals will become Novations. And on those deals, the profit is normally double.
I can see how you're doing hundreds of these because this is just like just that small nuance, the equity protection program. Because we've been like caught doing this ourselves. Like, oh, what about a Novation? You're right. They don't know what the hell that means. They don't even know what a wholesale means, let alone this complex document called a Novation agreement.
Yeah. Yeah.
Yeah. That's awesome. So, as you're going through that, so do you do any work to these houses to get them kind of like market ready? Like even if, I don't know, carpet, paint?
Nah, remember like the general property that was the ideal fit was in really good condition. So normally the situation that's best suited for this and the seller that's best suited for this is attached to a property that's in what I would call move-in ready condition. So I also would apply a disclaimer that says for the last 3 years, like you could put a overpriced piece of junk on the market and it would sell. What we're starting to do now is what we offer as like a staging service is what we're going to call it with our sellers, where we'll go in, we'll do some behind the scenes, what we call decluttering. I wouldn't say that to a seller because it could be perceived as offensive. Straightening up, cleaning, preparing for really good professional pictures. And then we want to make sure that when we go to show the property to a retail buyer, that it's appealing to them. So we're starting to do this now. We're doing a home inspection on the front end of all of our Novations. We're including that home inspection document on the front end of negotiations because we don't want to think we have a retail buyer at a solid profit locked in and find out 3 weeks from now there's something about the property that they're just uncomfortable with. And it may be something trivial or something, that we don't think is a big deal. But again, remember, you're selling to a retail buyer. They're emotional. They're probably a little nervous. They got 3 or 4 other people telling them they paid too much. You should have waited for interest rates to come down. That house needs way too much work, right? You should have got a better deal. So we want to really manage the buyer transaction at a very intentional level. And those are a couple of things that we're doing on the front end of these deals to make sure that when we go under contract and we go back to the seller and say, great news, we said 90 days, we're actually going to be able to settle in 45. We don't want to have to go back to them and get an extension or bring bad news.
Nice. So yeah, so that makes sense. And what you're doing, right, at the very base of business is you are making sure that it appeals to your customer, right, which is the
Yes.
retail buyer. At the end of this, that's who's going to be monetizing it, and that's something that I think gets very heavily lost as a lot of people look to explore these situations. So that's interesting. So yeah, the staging service. Again, a lot of it just about phrasing about it, because like you're completely right. You could go and say like, oh yeah, we're going to go and do some fix ups to the property, right, some repairs, some decluttering. That kind of sounds offensive to people if they don't see there's anything wrong, and it can immediately kill that rapport.
So, but to answer the
So I think
second half of that
that's
question, we
yeah.
do inspection and appraisal related repairs after we've accepted an offer, after the home inspection and appraisal, after we have mortgage commitment, when you know that the deal's 99% likely to go to settlement, because we've gotten through all of the, because that's all the stuff where a deal can die: the appraisal, the home inspection, and the loan underwriting. Once we've gotten through those three major hurdles on this retail deal, we'll go ahead and do appraisal or inspection related repairs. Or in a perfect world, you just go, hey, we got estimates of about $2,500 to fix that stuff. Would you be okay if we went ahead and gave you a credit at settlement? Now that's the cleanest way to do the transaction. But on FHA, VA deals, that often won't fly. The repairs have to be done before they'll fund the loan. So you just have to work through those. The differences between the loan products will dictate whether or not you got to do it before settlement.
Nice. So then you're never coming out of pocket until it's pretty much a done deal.
Yeah.
Awesome. That's super great. So one last question on, I guess, like this whole process with the seller. How do you, so once it's signed around, once it's novated, you have the end buyer, the seller has to go to closing, right? Like how do you keep the seller from becoming like a flight risk or getting nervous?
So again, I think a lot of what we talk about on the back end of the deal is dictated and predetermined by the upfront conversations that we've had. So one really cool part about these deals is you can get a limited power of attorney on the front end of the deal, and then you're able to sign listing documents, third-party agreements, releases, reply to inspection, change in terms addendums, settlement documents, HUDs. You can assign a POA, a limited power of attorney, that is the seller. So then they don't have to attend settlement. They can just get a wire at the end of the day, which a lot of people, again, remember, we're solving first world problems. Convenience is a reoccurring theme with a lot of these folks, and they're trying to find this balance between, I want to get more money than a wholesale deal, but I like the convenience of what this offers. So we get, I would say, limited power of attorneys on over 50% of our deals. And we just position it as a convenience. Hey, Mike, as we discussed, in order for us to get the property on the open market, there's a stack of paperwork I need to come over and get you to sign in order for us to take the property to the open market. But I wanted to let you know, a lot of folks in your position select to sign not this stuff. We have a one-page document that authorizes us to sign that stuff for you. You can pick whichever one you want, this paperwork or this paperwork, whichever you choose is the best fit for you. Just let me know which one you want to do, and I'll either bring the stack of documents or the one-page document. And if you go with the one-page document, you and I won't have to talk until settlement, where you'll just get your check. Whichever one you choose is fine with me. Just let me know which way you want to go. And people are like, well, what do you mean? What's the one-page document? It's a limited power of attorney. It gives us the ability to get the property on the open market. Someone's going to make an offer, hopefully, unless I've grossly misjudged the deal that you and I made. Someone's going to make an offer, and a lot of times we got to go back and forth till we finally get to a deal. And each one of those back and forth offers and counter offers needs to be initialed. So, yeah, a lot of people just try and skip all of that and go one-page document. But again, whichever one you want to use is fine with me. Nice. They'll go, well, yeah, let's go with the one-page document. I don't care what you guys do as long as I get my 200.
Yeah, that's no brainer. So we've done a couple novations, and one of them we did a power of attorney like that. And I'm just curious to hear what's your typical responses to this. But the seller that we worked with, they went to their attorney and was like, hey, so these people want me to sign a limited power of attorney regarding the sale of this property. And, attorneys see that and they're immediately like, you know what? You're going to give up your rights to your real property. And that's something that we face a lot. It's funny. Dan and I, we regularly joke about this. How many of our sellers have lawyers that they probably can't afford, but they all apparently have someone in their back pocket. So Do you ever have that situation come up, and kind of how?
Yeah, it doesn't happen for us very often. Although we have a bunch of students in attorney states where every single person has an attorney because it's the way that the law dictates property is exchanged. So we just created. It's kind of like I remember I was going through this. It's with an investor out of Boston, and he does some other deals in the Northeast. A guy named Tommy Caffarello. And he was like, hey, man, he's got this real strong Boston accent. He's like, we locked up about 50 of these deals, but 25 of them fell apart when it got to the attorney. I need your help. So as we were talking through it, I referenced, you remember the movie 8 Mile with Eminem, where his final performance, he says all of the things that he knew they were going to say about him, and then he hands them the mic and goes, there, tell them something they don't know about me. Well, we pulled an 8 Mile on him, and we created a cover sheet, and we said, now, Mike, when you go to your attorney, he's going to have a bunch of questions. It's kind of what they get paid for, is to ask tough questions. For our deal, we already know what questions they're going to ask. Let's go through them together. He's going to say, why would you allow them to market the property on the open market? I've listed the 3 things you told me were important to you. No inspections, as is, and you want a predictable outcome. So that's why we're doing it that way. I would encourage you to share that information with him when he asks that question. He's going to want to know what happens if we don't buy the deal. I've covered that right here. I put those 2 things in here. It's a very easy explanation. If you chose to go with the 1-page document that allows us to authorize the documents to get it to the open market, he's going to want to know why you did that. Let's talk through that, and I'll fill in these 2 blanks here so that you can answer that question when that time comes. So it was like 1 extra document that we did at the beginning of that. And then when they went to the attorney, he's like, well, why are you doing this? He goes, he said you would ask that. We talked about that. It's X, Y, and Z. Oh, well, what about that? He goes, yeah, he said you would ask that. We talked about it. The reason I decided to give him a limited power of attorney is I don't want to be bothered with all the back and forth documents of signing all that stuff. By the way, he mentioned that if you had an issue with that, no problem. We would assign you as my power of attorney, and then you could do the back and forth documents. So up to you, attorney. Did you want to be the POA, or should I let them handle that for me? Oh, well, no, as long as you're good with it, I don't want to be bothered with that. Oh, okay, cool. Me either. So we just created a cover sheet and then gave it to them with the contract. So they went to the attorney. It was like they were handling the objections for you. Because if you don't talk about them and then they ask those questions, it makes the seller feel stupid. And when people feel stupid, they're going to pull away. So that's what we did. We just created a 1-page document that says, hey, here's all the reasons someone would tell you not to do this. Let's just talk through it now, because if it's a problem, I'd rather know today than to have you 3 or 4 days from now feeling like you made a mistake. And then I'm calling you, you're not calling me back. I don't know what's going on. You don't want to talk to me because you might be embarrassed to tell me the truth. Let's just skip all that stuff and hash it out right now.
Man, I love that. I love the know you are back to the attorney. Like That's just like the ultimate. I mean, it's perfect because every attorney, you're right, it's going to be like, oh no, I don't want to do that. So that's that. Your tactics are so simple but so brilliant.
I got that, I think, from my grandfather. He told me, when you tell the truth, you don't have to have a good memory. So if you look at all the stuff I'm doing, I'm just telling the truth. And then if you talk to my TC, my dispo, sales rep, my agent, my attorney, they're all going to say the same stuff because they're just telling the truth. Yeah. So you don't have to worry about, well, don't tell him this or don't tell him that. Or hey, I just want to let you know what I told him. We're bringing our insurance guy over today, so you can get our buyer in there. When that's like, don't drive your truck that has come on, man. Like, it's a circus. So if you just tell the truth, you don't have to have a great memory.
I love it, man. We've had a string of really good interviews recently, Eric, and I think this might be my favorite one because, honestly, the stuff that you're saying, it's so actionable. Anybody can do it. And here's the crazy thing, Eric. I can tell you're telling the truth right now. You're not bringing a bunch of fluff. You're not bringing a bunch of bullshit. You're talking about how you run the business, and your authenticity is really coming through. And that's why you're crushing it, man. I love it.
Thank you.
Super, super good stuff. All right. Well, we're kind of coming up on time here. Unfortunately, I could stay here and keep talking to you. But before as we go into the end of the show, we have 3 questions that we ask every guest that comes on this show. And the first one, which is always the group favorite, what is your craziest real estate investing
this is
story?
A good one.
And this can be this can be a big win.
This is a good one. If you ever heard me do any sales training, you'll hear me reference this, where I talk about at the front end of your sales process, you need to build enough trust with the seller that when it comes time for negotiations, you can make an insulting offer without getting punched in the face. So to that note, I had an acquisitions agent of mine that went out. This is, probably 10 years ago. He's still here, by the way, the acquisitions agent, not the seller. And
Wow.
it went out, and back then I really played in like, let's say under $200,000, which was above our median sales price. Our median sales price back then was like 130. And he went out to a house. It was in really good shape. And the guy didn't want to do a Novation. He wanted a quick close, and he wanted more than our general offer model. And the acquisition, he came out, he's like, man, I think we should buy it. It's tight, but it's a really good house. It's on a golf course. I think it'll sell for $219, but I was at like $199. I want you to go out and meet the guy. If you say it's worth $219, it's a slam dunk. And I was like, all right, set up the appointment. Let's do 6:00 Thursday. He's all right, done. So, and it was out by where I would take my son to drop him off for football practice. And I helped out with coaching back then. And I'm like, hey, I got to drop my son off at practice about 10 of. I'll be there right at 6:00. Set it up for then. He goes, okay, done. So I get to football practice. I'm dropping off my son. None of the other coaches are there. And there's 12 kids running around. So I'm like, shit, what am I going to do? So I wait, and I call Joe. I was like, hey, can you let whatever the guy's name was know that I might be a little bit late? It could be 30 minutes. I can't leave. There's 12 kids here that are under the age of 10 years old. I got to stay here until someone gets here. Literally like 3 minutes later, the coaches roll up. They're like, hey, sorry, we're late, blah, blah, blah. I drop my son off. I drive to the house. I park at the bottom of the driveway because he's got now that I think back on it, it's weird every time I tell the story, but he had like a 25-foot motorhome in the driveway that he lived in, and the house was vacant. It was all very kind of peculiar. But at the time, I was like, well, everybody we talk to has got a kind of a weird situation going on. So I walk up to by the way, I'm 5 minutes late, but 25 minutes earlier than what Joe called him and told him I would be, because I said I might be 30 minutes late. So I'm anticipating no big deal. He's standing up on the front porch like this. And I'm walking up the driveway, and I start to cut across the grass. He comes down off the steps and is standing on the sidewalk. And he goes, blah, blah, blah. He's growling about something about pay me $1,000 for every minute you're late. And I kind of laughed. And I said, hey, I'm sure, let's go inside and look at the house. I'm sure I can. And the guy punches me in my face.
Wow.
So like my instincts kicked in, and I like shrugged it off. I stumbled back. There's fire in my eyes. And I charged at the guy, wrapped him up, drove him back into the building, and like in slow motion, his head like hit the thing, and he gets boom, and falls down to where he's like hunched over. And I was like, oh my God, I just killed him. And like I'm standing over top of him, ready. Like I didn't know is he going to kill? We're in a tricky business. Like the guy could have tried to shank me or rob me. I didn't know what was going on. And so I backed up. I cussed at him. Called the cops, went down to my car. They came. He denied it. None of the neighbors saw it. It's in a high-density residential neighborhood at 4 o'clock or 5 o'clock in the afternoon, whatever time it was, broad daylight. And, so I got punched in the face, didn't buy the house, never even got a chance to give him a number. He was just, something was so aggravating to him about me being 5 minutes late that he unleashed on me with I think it was like a right hook.
That's crazy.
And, but he didn't knock me down, and I got the last crack in. So that's my story.
There you go. That's a good one. Yeah, I don't think we've had any physical confrontations with anybody in our team yet. I was walking a house once where a tenant and a landlord got into a fist fight.
That's crazy.
And that was great because there was a 65-year-old lady and an 80-year-old lady, but like straight out of Jerry Springer. But no one's been struck yet on our team. Well, I'm glad that you're able to come out on top at least. All right, so the second question that we always ask is, what is the number one tip you would give to either a new investor looking to get started or a small investor looking to take their business to the next level? There you go. Easy. And I absolutely fully support that. That was the biggest thing for Dan and I as well when we started going, was found a mentor that we vibed with, and our business escalated far larger and faster than we ever would have predicted. Do you have any advice on finding a mentor? Because there's a lot of gurus.
I'd probably go the mastermind route first, meet up, spend some time with folks, get acclimated to their style. Like I see it now that I've never done any coaching until about 18 months ago, and I only do a little bit of what I would say like CEO coaching for people that are trying to scale, and Novations training. And then I see people who have actually coached that claim numbers that I know aren't true. Like I did 10 million last year, and it's like, you've been in the business 5 years and you haven't done 10 million total. Why are you telling, because it's going to get flushed out at some point. So I think it's good to join a mastermind, spend some time with these folks, and tap into the people that are at the same season in business that you are. And from that, you'll find mentors that may not cost you anything. Masterminds are filled with potential mentors that you can tap into. So I would probably go the mastermind or meetup route first.
Yeah. I think that's great guidance. I mean, it's all the real estate especially is so prevalent for people trying to have like a dick measuring contest. Everyone's talking about like their door count and all these sort of things. It's like, sure, you say you have 1,000 doors, but you're in a bunch of like LP positions.
And it's like the same way with volume. Like I know guys that do 25 deals a year and make $5 million. And then there's guys out there grinding over 500 deals that make 700,000 or 200,000, right? Because they're super inefficient and got a ton of overhead. It's and I don't know that, I think we assume that there's a lifestyle that comes along with those numbers. And sometimes it's very much different than what you would anticipate. The bigger business oftentimes doesn't come with the freedom I think that we assume.
Yeah, that's super valid. I like that. All right. So last question, where can people find you, follow you, and reach out to you if you'd like to do so?
Instagram's probably the best place to stay connected with me. I put out 2 or 3 videos a day where I'm just kind of talking about like what the 3 of us talked about today, what's going on in my business, what's going on in my personal life, what I'm seeing in I'm part of several masterminds. So I have sort of a unique insight as to what's going on across the country in different niches. Best way to find me on Instagram is Eric_Brewer_invest_. Or you can find more about our Novations course at brewermethod.com.
Awesome. Perfect. Well, thanks so much for coming on, Eric, and everybody listening, absolutely reach out to him. If you guys couldn't pick up on how much of a wealth of knowledge Eric is on this podcast, then you need to go look in the mirror because your judge of character is extremely poor, because he dropped such an insane amount of knowledge on this about a topic that is not talked about with a lot of accuracy. So Eric, thanks so much for coming on, man. We
appreciate it, fellas. Have a good day.
If you enjoyed the show, please share it with anyone who might find it interesting. And if you want to start generating off-market leads to be able to put these novations into action, go to collectingkeyspodcast.com/free, and you can get our free 5-step guide. And aside from that, guys, thanks so much for listening, and we'll talk to y'all next week.